Even though you may not have many options if you're in your 20s or 30s and want to retire comfortably, one of the best ones is to start investing now. It is understood that you need a lot of money to live a comfortable life, and for the working class, investing their money is one of the best ways to achieve this. You see, if you start investing early, you will be much wealthier. This is nothing new, and you've already heard about it a lot. However, for most people, this is still the best way to increase wealth and make sure you have a sizable reserve to use during hard times. In other words, you get yourself up for success and getting started early. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. We'll examine some of the most crucial possessions and investment choices you can make when you're young. One of the best investments you can make before turning 40 is index fund stocks, which comes in first. Despite the potentially very high risk, they offer some of the highest returns. You have plenty of time to make and learn from mistakes as you begin your investment journey, but you should always make wise, considered decisions. Based on the S&P 500 index as the benchmark, stocks have an average return rate of 10%. In actuality, not many investments will offer a return rate this high. Bonds may be a good addition as you assemble your index fund portfolio. Bonds are the safest investment even though they have the lowest return rate. You must make sure that between 10 and 20% of your portfolio consists of weighted bonds. Your investment is more secure as a result. You could also include the percentage and change it in accordance with your level of risk tolerance. Index funds for cryptocurrencies were just introduced. They appear to be quite promising even though they have not yet undergone through testing. The current return rates are extremely high, ranging from 10 to 15%. However, the risk rises as their return rate does. The fact that index funds charge little in fees is a huge benefit. The returns increase as the fees decrease. Beyond diversification, index funds also offer the benefit of many having low fees. Investment fees should be avoided as much as possible because they will quickly lower your returns. Be sure to consider the tax ramifications as you purchase the index funds. Second is real estate. One of the best investments in real estate for a variety of reasons. First off, there is typically a housing shortage, and real estate assets almost always increases in value. Owning a home is the first step in real estate investing. Your costs, such as rent, go down when you own a home. Once you own a home of your own, you might consider developing additional commercial real estate. These could be apartment buildings, townhomes, commercial buildings, and other real estate. There are other options though. If you're unable to invest directly in the real estate market, there are a number of crowdfunding sites where you can put as little as $500 into an investment. The money would then be invested in real estate properties along with the contributions of other investors. Third is education. According to statistics, studying is most effective in your 20s. Your 20s and early 30s are the best years for learning new things, according to research. Consequently, now might be the ideal time to earn that additional degree. Education is crucial because it can position you for success in the workplace. You must realize though, that not all education and learning are advantages. Be cautious as you go, because some learning can be classified as a hobby and is probably not monetizable. Start by looking for successful careers in your preferred fields, if you want to invest in your education. Additionally, now might be the ideal time to raise your level of financial literacy. Fourth is start a small business. When you're young, start a business. Why? The benefits of owning a business are endless. You will be able to make as much money as you can. Another investment you should make in your 20s is a startup business, which has unlimited return on investment. The potential for massive ROI is astounding. Young investors can reap the incredible rewards from their investments. You don't have to launch the company yourself. You can make investments in other people's companies in exchange for ownership stakes in those companies. For instance, if you know the founder, becoming an angel investor is a fantastic option. Your investment may take the form of a convertible note, which means that if a certain condition is satisfied, it may become a loan. The alternative is via crowdfunding. Numerous crowdfunding platforms feature amazing startups with great potential. Make sure to read extensively about the founder and comprehend the background of the business before making an investment. Choose businesses with compelling narratives and founders who have some level of business-related training, experience, or education. The alternative involves collaborating with a venture capital fund. You can start by becoming an accredited investor and work your way up to venture capital. These funds, however, have strict requirements and a minimum investment requirement. Fifth is treasury bills. For every investor, regardless of age, treasury bills are an essential investment. There is no better time than when you are young to invest regularly in treasury bills. Short-term government guaranteed debt instruments called treasury bills are used to fund spending and manage the money supply. 3 tenures, 90 days, 182 days, and 364 days are available for treasury bills. The cash you have on hand can easily be invested in treasury bills and cashed out when the bills are due. This is an example of financial concept known as asset and liability matching, which entails buying an asset to help pay for a future liability. Treasury bills are completely risk-free, so unlike other investment options, your returns are guaranteed. Why not invest in them since they have a reasonable returns as well? Sixth is growth stocks and dividend stocks. We've made it clear that you should take risks when you're in your 20s and 30s because you still have time to recover from a loss of funds. In order to invest some of your money in a high-risk, high-reward endeavor, consider stock investing. Growth stocks are simply securities with projected annual growth rates that are substantially higher than the industry average. In comparison to their peers, these stocks produce more stable positive cash flows and revenues. Contrarily, dividend stocks are typically those of mature, financially sound businesses, so their share prices are less erratic than those of growth stocks. You should start including dividend stocks in your portfolio as soon as possible. Seventh is exchange-traded funds. EFTs resemble index funds because they are a collection of securities that include a variety of assets including stocks, bonds, and gold. They trade similarly to stocks, allowing shareholders to buy and sell shares on a market. Because of their adaptability. Eighth, commodities in economics. A commodity is an economic good, typically a resource that is fully or substantially fungible, meaning that the market treats instances of the good as equivalent or nearly equivalent without taking the source of their production into account. A few noteworthy ways to invest in this exist that directly track a particular commodity index can be used by investors to make investments. These complex and highly volatile investments are typically only advised for experienced investors. Mutual funds that invest in companies involved in the commodity industry are another way to expose oneself to commodities. Commodity investing has benefits such as portfolio diversification, potential returns, and an inflation hedge. Commodities have also performed the best during periods of inflation, making them one of the best assets to own. Ninth is annuities. In a contract known as an annuity, you and an insurance provider agree that the latter will give you regular payments, either now or in the future. Either a single payment or a series of payments known as premiums are used to purchase an annuity. Retirement savings opportunities are offered by some annuity contracts. Your savings could be used by others to generate a retirement income stream. Others still practice both. You have deferred annuity if you use an annuity as a savings vehicle and the insurance company postpones your payout to the future. On the other hand, you have an immediate annuity. Investors frequently think about the annuities when making retirement plans. Additionally, they are frequently promoted as tax-deferred saving products. Annuities do, however, have a number of costs and fees, including administrative, mortality, and expense risk fees. Lastly, are cryptocurrencies and initial coin offerings. Only recently have traditional Main Street investors begun to show interest in cryptocurrencies and initial coin offerings, or ICOs. With over 1,000 different cryptocurrencies currently available and billions of dollars raised in ICO financings. These quickly evolving markets are alluring for investors. Most individual investors find it challenging to understand these complicated investment products and assess their risk levels. We do, however, know that they have extraordinarily high returns. ICOs have sometimes performed incredibly well. For instance, the OTA had 13,000 times return on investment. In other words, if you had invested $1 when it was offered, you would have made $13,000. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.